Regulation of stablecoins. Are stablecoins regulated? So according to Forbes, there is a bill out there and it allows stablecoin issuers to either choose a federal license from the office, that is the US office of the controller of the currency, or a money transmitting or stablecoin issuing license from the various states. And according to the Financial Times, they are saying that tokens like Ether, that is derived from the ethereum blockchain, are arguably securities, yet they do not comply with existing laws, and they are rightly beginning to face the wrath of market watchdogs. But many taxpayers will balk at the idea that they should bail out others who have taken a punt on risky assets that have come with consistent warnings. Unfortunately, a lesson for regulators is that their health warnings around crypto are no match for endorsements by celebrities like Hollywood actors and athletes all around the world. The risk of widespread losses and of crypto's turmoil spilling over into the real world is sufficient that some guardrails are needed. There has been some progress in the US, UK and the EU to begin designing frameworks despite internal turf wars and concerns that complicating the current simplicity of a mostly unregulated, unprotected product may bring its own unintended consequences. But how can a phenomenon that is everywhere yet nowhere be properly regulated? Crypto's decentralized structure is designed to be out of the reach of national governments, a red flag or a libertarian goal depending on your viewpoint, but we have been able to point out that actually decentralization of crypto is actually quite illusory. This is based on another piece we made a video out of from the Financial Times, and they're saying there by according through their author Eswar Prasad. He's saying there that this decentralization that has been touted, that has been associated with crypto assets, is actually quite illusory, because a handful of computing consortiums now dominates the process of validating Bitcoin transactions, and ownership is concentrated as well. So can you really say that it is that centralized, given that, So moving on, we can see that as concerns regulation, a start would be to focus on where crypto and fiat currencies meet, which is namely stablecoins. So the stablecoins, they claim to be underpinned by real-world assets as a way for traders to park their cash safely between bets on more volatile coins. That promise needs to be audited, and stablecoins should be subject to capital and liquidity requirements for obvious reasons, yes. But unless there is lockstep action taken around the world, little will be accomplished to control an online industry that operates beyond borders. Until then, investors ought to remember another adage that the crypto industry has not pushed. If it looks good to be true, it probably is. And we also know that Bitcoin has dropped below $20,000 this week for the first time since July last year, 2021, while Ether, the token linked to the Ethereum blockchain, fell to nearly $1,000. The declines mean Bitcoin has shed 70% of its value since last autumn's peak, and is now trading below a widely followed market metric known as its realized price, the average paid by buyers for coins in circulation. The declines have deepened the crisis that has gripped digital asset markets in recent months as investors exit high-risk assets and some of the biggest players struggle to meet their promises of supercharged returns. This month, the total value of the largest cryptocurrencies fell below $1 trillion, down from a peak of $3.2 trillion in November of 2021. Investor faith has been eroded as Terra Network, a popular stablecoin, collapsed, and lending platform Celsius blocked its customers from withdrawing funds. Some of the world's biggest exchanges, including Coinbase and Gemini, have cut thousands of employees to cope with the downturn. It's a bloodbath out there, said Changpeng Zhao, chief executive of Binance, the largest crypto exchange, on Twitter earlier on Wednesday, the 15th of June 2022. Hunker down, make sure you can last, according to him. Jay Howe, chief executive of OKX, warned investors to be mindful of leveraged positions in a volatile market. Anything can happen. Things can always get worse. Adequate risk management is the best way to survive, according to him. Stay safe. Noel Atchison, head of market insight at Genesis Trading, said Bitcoin this week fell below its realized price, currently about $23,038, according to glassnode, for only the third time in the last 5 years. In the other two cases, in November of 2018 and March of 2020, this signaled that Bitcoin was very close to the market floor, she said. The $20,000 level also represents a significant threshold for the cryptocurrency because it puts the price close to the peak levels achieved during the last major run-up in crypto prices in 2017. The pullback in crypto comes amid a broad sell-off in global financial markets as central banks start to reduce the economic support that has supercharged markets since the COVID-19 pandemic struck in 2020. The declines have been mostly painful for highly speculative assets. And we also know that Bitcoin miners are scaling down production, are sinking cryptocurrency prices, and rising energy costs squeezes profits and slam their shares. So miners, we choose powerful computers. They are the ones that are underpinning the centralization or the lack of it. These miners, this global competing consortium. So they use powerful computers to create new units of Bitcoin and validate transactions on blockchains. They have been forced to change tack as tumbling crypto prices threaten to undermine their heavy investment in the technology. Bitcoin hash rate, a measure of the amount of power dedicated to creating new coins, has fallen 4% since the start of the week, according to data from blockchain.com. The decline suggests that digital miners are dedicating fewer competing resources to crack complex puzzles for which they are rewarded with newly minted Bitcoin. Blockchain.com data also showed the total value of revenues paid to miners fell to its lowest level in nearly a year. Shares in miners Marathon Digital and Hot 8 have fallen about 40% over the past month, while Argo blockchain is down 35%. Currently, it's not fun to be in the mining business, says Alexander Newmuller, digital assets project lead at Cambridge Center for Alternative Finance. The crypto market has come under strain following months of declines in its biggest coins, shrinking the value of its market from a high of $3.2 trillion in November to just under $1 trillion. Bitcoin has lost more than 50% of its value this year to trade below $21,000, with losses accelerating in recent weeks after the stablecoin Terra collapsed and lending platform Celsius blocked its customers from withdrawing funds. There are miners in the industry who are subject to fluctuation in energy prices, according to Charlie Schumacher, a spokesperson for Marathon Digital, one of the world's largest Bitcoin miners. As such, they are feeling pressure from two different directions: high cost coupled with low revenue per Bitcoin generated. Marathon itself spent more than $200 million on mining related investments in the first quarter of this year, 2022. The largest operations tend to have fixed costs and larger buffers to fall back on, but the downturn leaves smaller companies vulnerable to takeovers and shutdowns. Rising energy costs is related to the war in Ukraine have hit the profits of many companies. Dida Bekovor, a Kazakh miner and co-founder of mining company Zive, said he was adjusting to new prices and reality. He's adjusting to new prices and reality, and has switched off non-profitable mining operations once Bitcoin fell below $25,000. Companies that have turned to banks or markets for capital in the past are now finding it tougher. Equity markets have dropped and appetite for fundraising has weakened, while interest rates have risen rather. Paul Wall, chief executive of UK-listed Argo Blockchain, anticipates the first wave of takeover deals within a year. Okay, so see what you make of all of these things, and you'll find the links to this. If there's any link, the link to this video, you find it in the video. Okay, and thank you very much for watching this video on regulation of stable coins.